The first lien HELOC strategy is a strategy that banks don't want you to understand. I'm going to show you how one of my clients paid off their home in less than 5 years. No, you don't need to work an extra job or have any side hustles in order for this to happen. Most people are stuck in a 30-year fixed mortgage, paying almost 2 to 3 times the amount of money back to the bank over the life of the mortgage. The first lien HELOC flips this strategy completely upside down. All you need to do is sweep your monthly income into the HELOC because every dollar that gets deposited into the line of credit pays your principal balance down. And because we're paying simple interest, the lower the balance is, the less interest we end up paying. So you as the homeowner get to decide how much interest you pay back to the bank. Just get more money into the loan. Over time, the strategy starts to snowball to where you get to your point of financial independence significantly faster and you can start to build some serious wealth. Let me show you what I mean. Here's a client. These guys were pretty smart already off the bat. They took a 25-year mortgage and they've been in their home for 9 years at a 3.25% interest rate. So they're doing pretty well for themselves. Their net deposit is about $11,500. They also got about 45 grand laying around in their checking and savings. Remember, the one-time deposit is optional. You don't have to do this. All we're basically looking at is if we move the money from one vehicle to another, can we save more money on interest? And remember, this is a HELOC, so we always have access to that cash. We're not losing access to anything. We got 11.5 going in. After they pay all their bills, they got about $1,500 left over. Here's our current mortgage, 16 years left. Pay off the 174, total payback $223,000. Here's our HELOC, that same $174,000 balance. All right. We're paying it off in 58 payments, saving them $21,000 worth of interest. Average interest rate on the HELOC, 8.3%. However, over the 58 months, we paid back $28,000 worth of interest. That is the equivalent of having an effective APR of 1.229%. Now, these people were smart by doing a shorter term mortgage, which I don't see too often, so props to them for doing this. But check this out. At the end of their mortgage, they'd have no balance in 58 months. They'd have access to $174,000 on a line of credit. And if they stay in their current mortgage, they would have only paid down $43,000. They would still owe 130 grand on their mortgage. This is a strategy you have to understand. This is what's going to get you ahead in life. You're going to pay off your debt. You're going to start building wealth and change your financial future. So follow for more tips.